Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in today with a soft opening. The ADP numbers, which people look at as clues for what Friday's number could bring, was pretty soft. So the futures were down and everyone started getting all bearish. Everyone started saying the game is over. And for us, we said, you know what, we're going to look at levels. Levels that we've been using as pivots, as benchmarks in the past few days. And I'm sure if you watch this show, you could just think about exactly what I'm about to say. 1390, 1392 on the SPX. Spiders, I've been talking about 139.36, which was that area. So I've been making it a zone like 139.30 to 139.50-ish. I've tweeted about it. And even today on Bloomberg, I talked about it. Alex was like, should people be shorting into this 1390, 1392 area? I'm like, I don't really think so. I think it's a time to cover. I know that's where I'm going to cover my spiders, which I will do, as you saw by the virtual trade floor, and look to see if we hold and what acts well to potentially get long. So if you look here at the chart and not at people's opinions, you will see, look at the chart of the SPX. Where did we hold? We held 1393. So if you go sideways, I don't just come up with these levels out of my you-know-what. I come out because they make sense according to the charts. This was the recent resistance. This is when we broke above that 1392 and you had that squeeze. Guys that didn't switch gears when we had this double bottom here, between the April 10th and that Monday. So anyway, with that said, squeeze through and now we've been holding it. So the longer we hold above this 1390, 1392, I think the more confidence the bulls will get, especially when we keep absorbing headlines the way we did today. You want to look at some strong sectors? Look at the RTHs. Talked about it today in morning call. They don't care that Britain's in a double dip recession. They don't care what some people are tweeting out there. All they're saying is, you know what? Here's your resistance. It was the first group to make new highs, and now it's holding up very, very well. That is constructive. You want to see stocks? We talked RL today in morning call with Stephanie Link. Look at that nice pattern. So we drew this line saying as long as it holds above 170, you can see some momentum. There you go, looking solid. Lulu, guys, were chatting about it all day long on the virtual trade floor. Nice breakout, very, very healthy. Overall, this has been a grand slam home run winner for investors slash people that wear the clothes, because it's actually really nice, and some traders. And then you look, someone brought Williams-Sonoma to my attention. Look at this chart. Looks really, really nice. Look at this level that it just came above. Really nice area. Nice resistance. Very clean. So here's a nice move. Target, people have been really maneuvering it very well. Last time I woke up, you remember right here when it broke this downtrend. Big move, topped out. It's been descending and correcting, and rightly so, considering look where it came from. And now look at it where it is. It's hovering above this breakout area, which is showing some health, which is showing some commitment. So there's like a lot of strong stocks out there. And we've talked recently how the mantra of 2011 has been, a market of stocks, not a stock market, because everything's been acting differently. And there are trades in different areas. Even, like just say Zynga, for instance. It's been a horrendous trade. And then finally, it did a double bottom into big support. And then now you had a nice two-day move. I think it was up like 4% with the Facebook. It's so funny. We said, oh, maybe 2 weeks before it'll start going. People are playing it here for a Facebook move. Well, maybe we get the Facebook move down here. But anyway, here was your red dog reversal. This is when it went below the low right there, came above, nice two-day move. I think it could easily get to at least this 945, and then who knows, if it really gets frisky, perhaps it comes back up and retests this 11 area if Facebook is on their roadshow and they start saying how 10% or more of their income comes from Zynga, which is what's been stated. That could be good for that stock. But overall, nice 2 days. If you got stopped out here, great. If you got stopped out here, this is where I got stopped out. You have the luxury of buying it back and trying to maneuver it there. We talked Apple today. Very funny, like after yesterday's action, I was on the radio talking to people on my desk that every trader in the world is going to want to short Apple today just because of the way it acted yesterday, and rightly so. And typically Apple makes everyone feel bad about themselves because they can't give out free money unless you're an investor, you close your eyes and you've been in it for a few years. Anyway, so I'm like, let's do the red dog reversal again. Yesterday the pattern worked perfectly. It traded through 583, went as low as 581 and change, came back above, and then went as high as 595. So today, I said, guys, let's simplify it, do the same thing. Yesterday's low was 581 something or other, I don't know, I'll get into the chart. If it goes below it, comes back above it, we'll do the same trade. And it went above it and it went right to 587. Not the same type of trade as yesterday, but a nice cash flow scalp. And now if you look at the chart of Apple, you will see maybe this is your pivot area now. This is your earnings pivot. Okay, yesterday they confused everyone, including me, if you stayed with it, but it didn't actually confuse guys using technicals because it showed relative weakness, which we went over yesterday when the market was going higher. But today is the first green day out of the last 1, 2, 3, 4, 5, 6. So now if you were looking for an earnings pivot to hold as a swing trade, here it is today, guys. You're along it. The low here was 581.23. If you use it just as a cash flow trade, you're in it, you made money. If you're using it as a day and a half trade, tomorrow if the futures are up, I'm sure this will be up with it. There's your cash flow. If you're looking at it at a swing, somewhat like we did here, obviously things are a little different. Here is 2 red days. Obviously Apple had more than that this time. You finally had a green day, and then you could have added to it once it broke this little range here. And then obviously when it went above this high here for the move. So if you want to use same type of strategy here, you're in from 581. If we could go sideways above it for a little bit, we'll then have 2 different types of trends to add to the position if it's working. One above today's high, which today's high in Apple was about 587.40. And then potentially, you caught yourself an earnings pivot, and at least you had it with a calculated plan. So if it reverses tomorrow and today meant nothing, you get stopped out of 578, rightly so, at least you followed your plan. As far as other tech stocks, if you look at the Qs, Qs hung in there today. You look at the pattern, it's definitely different. I drew this with Stephanie this morning, this descending channel, broke above, and even though it's not at highs, it's holding above this broken trend line here, so going sideways now is healthy. It's not leading, which I'd rather it be, but it's still hanging in there. So it could continue to the upside. Stocks like Google held 600 again, so now it's building somewhat of a floor, so maybe you could trust it a little bit more. I personally think, it's hard to trust this thing considering 2 quarters in a row. It's definitely not pleased investors. Here's one, here's the other. But for right now, held the 200-day here, held the 200 again, just held higher today. It's still in the game, but the next thing it's going to have to do is break this, or break above this resistance, which it hasn't been able to do. Amazon still hanging tough after its earnings play. This was the low from the earnings announcement day. It's been now hovering pretty well. You had a nice trade through that high there of 228. Now it's flagging again. Your next entry for a continuation long would be through this high here, and this high here is 233.84 for some type of continuation if it wants to, so that should be on your radar. I don't even know what Baidu's doing. Let's take a look. Baidu, trying to build a lower level pivot. I don't even think it should be on your plan right now. When they sold the news, because I think the news was out so many different times and so many rumors of it that it started being a rumor around here. So if you go up on the rumor, the news happens, it gets sold. So be careful, see what this amounts to. Some guys were looking at LVS today, and it's definitely choppy. Okay, I drew this morning. It tried to get going. I think if you're long it, make sure if you're not committed, your stop is 54.67. It seems like it still needs time ever since this reversal here on April 12th. It's been slowly coming in. We shall see. LinkedIn's got earnings tomorrow. There was a rumor, or the site was down today, gave us actually a chance to buy some cheap calls. I got out of my stocks. I'm not going to hold the stock into earnings, but I've been talking about how I think out of the 3 IPOs out there that LinkedIn has a huge future. Hopefully they can be consistent with their earnings. Last time earnings came out, they had a nice move, was right here. So at this particular point, we bought some cheap options down $3. I think I sold them for like a 30% gain, and I'm going with a tier 1 in options just to be involved. I'm not going to be here, I'm going to be away, but if this report is good and they have decent guidance, which a lot of sell side guys are saying they should, this 122 is a level it should be, it should gap and hopefully hold above. If it doesn't do it this quarter, maybe next quarter. If you're staying in it with the stock for earnings, make sure you're a macro investor. 2 other IPOs that I've talked about in the past 3 months that I've said have been in the game for good trades and also, a big future. One of them being Coors. Besides LinkedIn, if you look at Coors, it had a secondary. It absorbed it really well. This stock, since it came public, oh my goodness, has it been a winner for traders who got to know it early. This was one pivot. And then if you go all the way back here, the most recent pivot was here's where it made a high. This was your wide range bar on the news that it's going to have a secondary, held in nicely. Then we talked about this pivot here where it broke, and now it's coming right back to the highs. Maybe it goes sideways a little bit and then it can continue. But overall, this has been a huge winner, a three-bagger. Dunkin' Donuts has been trying. It tried to break out today. Didn't exactly have the power yet, but I think you could stay with this thing. I think that this too is holding up very well. Last time we talked about buying, it was right here around 30. Had a move to the highs, came back, retested on the secondary news because these things do secondaries to get things out of the way or get people out of the way. And now I think the next buy price will be when it takes out this 33.50 or 33.55. If you're not committed to it, I would say put your stop down here. Okay, I'm long this thing and I'm going to go away with it, and my guys have a plan on getting me out. And if you're on the virtual trade floor, I talked to you about it. As far as some of the banks, I'm not really sure here. We talked yesterday how they looked strong and they gave us clues that it would not hold in there. Bank of America, if you're long, be long versus this 804 area. So that's your line in the sand. Just to show you how you really need to obey your stops. Yesterday, I tweeted about how there's pivot levels in Goldman 115.50, JP Morgan 44, Bank of America 833. They all traded above those pivots and then they couldn't hold, so I got stopped out on my Goldman Sachs. And when you get stopped out, it kind of hurts. That means you probably lost, or at least you lost on your last trailer, because I know we took some trades above 116. And if you hold some, you always hold some, and then you get out when you have to. Or you get out when you can, not when you have to. If you look at Goldman Sachs, here's where it tried to break above. Okay, went as high as 116.48 and then closed below the pivot. So we got out. So right there, if you got out yesterday, okay, when it didn't hold above this level, you saved yourself another $1.50 or so in pain. So that's what you have to do when you're trying to trade these things for moves. It tried to break above a momentum level and did not hold. Anyway, taking a look at gold, I'd say it could have been worse. That's I guess, the thesis here. It's still hanging around. I did get stopped out today. I didn't get back in it earlier on. My stop was below this area here, which was sometimes an 80-20 trade or a red dog reversal gets you out because that's what it's made to do. 168.31, and went as low as my stop was 169.70-ish. What was my stop here? My stop was like a 160.11. Anyway, it went below, it came back above. If you want to look at it a little bit closer, I guess you could say, you have your low here. Here's your higher low. Here's another higher low. So maybe this time it tries to go. It's been a very frustrating trade, as every time it tried to get above it, it hasn't been able to. So if you're still in there, I would say have like a macro. If you're in tier 1 and you're a gold bug, be in long. I would say put your stop down here and just don't add and let it go. It still has a lot to prove, as it hasn't been able to get above this 162, 163, and then obviously the real line in the sand is that wide range bar that's been controlling this move ever since early March. And if you want to take even a look back even further, I remember this outside day. This was your get out of Dodge. This is when it traded through the highs, came back below, and it's been in a downtrend ever since. But lastly, if you go look at gold on a longer term, you'll see it's still all the way up here. Okay, if you want to draw trend lines. So people say, yeah, well, it might be in an intermediate downtrend, but on a macro level, it's in a major uptrend, which is true. But the question is, what's your time frame? This uptrend doesn't get tested to way down here, and then you have another accelerated uptrend that it's already somewhat broke. Okay, and that was right into there. So at this point, I would say I have a lot of squiggly lines here. Bottom line is, I do think we mostly trade on a midterm trend here, and right there, this is what you're watching. Here's your stop, here's your potential motion area, and it's still choppy. So with all that said, this is the first little trip I'm taking with my family, my wife, my son. He's now 3.5. We're going away tomorrow. I'll be gone Thursday, Friday, and Monday. Evan will be doing the morning call tomorrow with Jill. He'll also be doing the recap, and he'll also be doing conversations on StockTwits. So make sure to tune in. He'll give you a different look, a different flavor. He'll be here with Brittany, so make sure to tune in tomorrow. Sperling will be doing Friday's relaxed morning call and recap, and then Monday, Evan will be back with Lindsay Bell. So make sure to trade versus those upper levels if that's your time frame. Okay, you see, showed you 3 charts that all look pretty damn good, and kind of avoiding what the overall macro thesis is, with Europe's slowing, some of our US data not as good, blah, blah, blah. PS, again, you look at the chart of the spiders, this is all you have to follow. As long as we stay above this area, I don't think the market's going to get so pressured. You have the same type of area in the diamonds. Here you go, holding higher. This actually made a new high yesterday, held in today pretty well. It can go again. And then look at the RTHs. Okay, not so bad. If you go quick look at the IWM, it also, reversed today. So yesterday's outside day didn't lead to anything. What you look for in an outside day is it's a day to take notice, because you want to see what happens next. And what happened next here was not so bad. So it's not game over here either. You're still well above this support. It's just not ready to bust through the highs yet. So all in all, in the second quarter, the movement's a little bit slower. It's a little bit more choppy. First quarter, we had massive gains. You had to be in there. You had a lot of breakouts going on, this and that. This quarter so far, we've been digesting. And there's been a lot of good individual stock action. And there's also been areas to be short, and maneuver for cash flow. And if you're going to have 6, 7, 8, 9 positions, make sure you have some hedges, because there's still some headline risk. Tomorrow, you have claims. Friday, you have the big jobs number. So there's still a lot to look forward to, or a lot to look out for. And also that France downgrade. So just know that your stocks are acting well. Don't listen to the noise out there. Listen to the stock action, and just have your plan and wait for the market to confirm it. Scott Redler, T3 Live. I will see you back here on Tuesday. I'll check in on Twitter here and there, but I'm not going to be that active, and the stream will be quiet from me. Have a great night and weekend.